Hello friends, welcome to this June update on asset allocation and fund of funds. Over the past couple of years, we've seen fund of funds gaining traction in the market. The industry FoF AUM has increased from 6,000 crores in March 2019 to around 43,000 crores in April 2021. So that's a growth of almost 7 times over the past 2 years. In this, the domestic FoFs are around two-thirds, which is about 30,000 crores, and the FOFs investing overseas are the remaining one-third, and both have seen strong growth. On a monthly basis, fund of funds are seeing a net inflow of about 1,600 crores, two-thirds of which is in the domestic FOFs and one-third in the FOFs investing overseas. In this context, the Aditya Birla Sun Life Asset Allocator Fund of Fund is a one-stop shop which provides investors diversification across 4 asset classes, namely domestic equity, international equity, fixed income, and gold. We have the flexibility to invest up to 20 to 80% in domestic equity, between 0 to 15% in international equity, 15 to 75% in fixed income, and the remaining 5 to 50% in gold. Hence, the ABSL Asset Allocator FOF crystallizes our fund house strategy, and the portfolio is aligned with our outlook. Investors can invest in just this one fund and get exposure to all the underlying ABSL funds. Essentially, this fund of fund enables stress-free investing with an evergreen fund. A dedicated portfolio manager takes care of the asset allocation, fund selection, and the periodic rebalancing. So investors need not time markets and can just stay invested for the long term without having to worry about the changing market dynamics. Coming to our view on the asset classes, on equities, the strong global growth, loose monetary policy, and excess liquidity are boosting global equity markets to all-time highs. In India, due to the second COVID wave, we could see earnings downgrades and returns could be muted in the near term. However, with the COVID second wave peaking out and states announcing relaxation of lockdowns, India's economic recovery should come back on track in FY23 and our outlook remains positive. The risk reward for equities still looks relatively attractive as compared to other asset classes. In fixed income, floater and short-term funds continue to be the best risk-adjusted places for fixed income investors to get accrual returns over other fixed income assets. Gold prices have seen an uptick and are expected to continue rising on the back of rising inflation in the US and the continuing weakness in the dollar. Real estate returns have been depressed over the past 5 years as prices have been flat. We expect only a gradual recovery in prices over the next couple of years due to the high inventory levels. So considering our view on the asset classes, in the fund of fund, currently we have about 54% allocated to domestic equities, about 6% allocated to international equities, so that's a total of 60% allocation to equities, about 12.5% to gold, and the remaining 27.5% to fixed income. Within equity, the core of the portfolio are the large cap and diversified funds, but we also have good exposure to the small cap fund and thematic and sectoral funds such as banking, infrastructure, and digital funds. On the fixed income side, the core of the portfolio consists of the corporate bond fund and the low duration fund. And for gold, we have invested in a gold ETF. The performance of the ABSL Asset Allocator Fund of Fund has also been very strong, and over the past year, the fund of fund has given about a 43% return compared to a 34% return for the benchmark Crystal Hybrid 50/50 Index. The fund is ranked in the top quartiles both in the short term as well as the medium and long term basis. Thank you and happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.